In Investing 101 today, how rate cuts by the Fed affect retirement savings. Policymakers at the Federal Reserve have cut borrowing rates 3 times this year. The federal funds rate is now in a range of 1.5% to 1.75%. That low level is pushing investors into the stock market where they hope for great returns on their stock investments. And it's working. To date, the S&P 500 is up more than 20%. We are turning to Greg McBride, Chief Financial Analyst at Bankrate.com. Good to have you here with us, Greg.
Hi, Angie.
What will this latest cut from the Fed mean for investors, do you think?
While rate cuts are good for borrowers, it's savers that get stuck with the bill. So expect rates to trickle a little bit lower on things like savings accounts and certificates of deposit. This is still going to leave you ahead of where you were a few years ago. This takes us back to basically where we were around the middle or early part of 2018, which is still better than we had been for the 10 years prior to that. But savers clearly giving up some of the benefit of higher rates that they'd gotten over the course of the past couple of years.
What is the Fed implying about the economy?
The Federal Reserve has cut interest rates 3 times in an effort to insulate the economy from external forces, things like the trade dispute with China, things like the slower global economic growth. And what they want to do is just basically get out ahead of that, give a little bit of boost to the economy right now with the idea that it can kind of soldier through some of this stuff. If the economy is strong enough to stand on its own 2 feet, ultimately the Fed can stay on the sidelines, and that's going to be good for everybody else. If the economy stumbles, the Fed's going to have to step back in and continue to cut interest rates.
What will these lower rates mean for credit card holders? Are banks actually lowering rates?
Credit card holders will see the lower rate trickle through, but it's not going to happen right away. It might take 60 to 90 days before that quarter-point rate cut shows up on your account statement. But rather than waiting for that lower rate to come to you, if you've got credit card debt you're trying to pay off, go out and seek out those low rate balance transfer offers. Use that as your tailwind towards debt repayment. These lower rates can help you in that way in seeking out a better low rate balance transfer offer to accelerate your debt repayment.
Thank you, Greg, for helping us out today.
Thanks, Angie.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.